Hello, everyone. My name is Antoine Larmanjat. I'm based in Paris, and I'm a technical director at the Office of the CTO with Google Cloud. And today I'd like to talk to you a little bit about a few trends that are taking place in the financial industry and especially in banking. So, on the next slide, what we see is that financial services and especially banks are facing unique challenges that few industries have faced before. A tough economic environment, increased pressure from the regulators, new expectations from customers, new technologies that they have to adopt, but sometimes they struggle too because of internal organizations that are not adequate. So first, let's have a look at the economic situation. Markets are increasingly complex, volatile, and uncertain. COVID has shown that almost overnight, a situation that was once seen stable and reassuring can change dramatically and completely. And investors and financiers, they don't like uncertainty because uncertainty lowers levels of investment and accelerate crises. So today's interest rates, if you look at the interest rates of today, they are extremely low. And given the economic situation to come, they're probably going to stay that way for the foreseeable future, or at least for a few years. So banks will have to find new ways to get to profitability, new ways to innovate, new ways to attract new customers, and competition will certainly increase. Second, customer expectations on banking, especially, is changing at a very high speed. Banking has become fully mobile, and payments, which formerly played only kind of a limited commodity role in banking, is seeing their role increase massively. Everybody is in payments today. So industry disruptors and neobanks, as we call them, have taken an approach to focus primarily on mobile experience and price. And they don't have to deal with huge mainframe and legacy systems. They have their new systems, and that gives them an advantage in speed, in agility, and in innovation. Well, since the crisis in 2008, regulation has also changed the market the banking market quite drastically. First, bank compliance costs jumped drastically, and costs related to increased regulatory pressure now take a big chunk of banks' IT budgets. This causes a real problem because IT budget being stable or even slightly declining, this does not leave a lot of budget for innovation. This intensified regulatory environment comes from various parts of the business and covers many different activities. Regulatory reporting has become more and more complex and needs to happen more frequently, if not in real time even. Fraud and anti-money laundering monitoring has led many banks to hire armies of controllers, and failing to comply is not an option. It's not an option there because regulators are more and more demanding on all these regulatory reporting and all these new regulations. So incumbent banks have been knowing for a long time how to deal with an intensified regulatory pressure, but new banks now start feeling the pain the hard way. While some of them might have neglected the regulatory aspect, they're reminded that compliance is non-negotiable. In Europe, what we also see on the other side is that European value propositions are picking up. What does this mean? It means that because there is a unified banking landscape across Europe, because of there is a unifying banking market practice that people want to have more or less the same services from one country to another, there is a kind of a relative leveling of customer expectations across European countries. So there are fewer and fewer reasons to have a different banking application, whether you're in Lisbon, in Paris, or in Rome, except for the language, of course. And this benefits new entrants that have built their value proposition around multi-language, multi-tenants, and European products. And this puts a lot of pressure on incumbent banks because they have to centralize their IT systems, they have to unify their landscape, they have to consolidate their operations on a European basis. Finally, banks hold a lot of data, a lot of personal data, a lot of behavioral data from their customers. Personal data that has to be protected, that has to be encrypted, that has to be kept safe, and personal data that cannot leak. But personal data on customer purchase behavior is sometimes very tempting for banks and for advertisers, leading to large opportunities that sometimes customers might like, but also to potential issues, regulatory issues, reputational issues, and legal issues. And not even to mention the difficulty that many financial institutions have to manage, control, and govern their data, which is going to be the idea of governance and controlling the data. It is going to be something that is going to be more and more critical for banking institutions. If we go to slide 2, so what do customers really expect from financial services, especially in the banking, in the retail banking area? We like to say at Google that customers like to be delighted by novel and personalized experience. And among these experiences, what we see is that onboarding is going to be a key aspect, for example. This is an area where many incumbent banks struggle to provide a straight-through experience compared with neobanks, and only a few number of traditional banks allow their new-to-bank customers to onboard automatically to open an account. And to open an account without uploading tons of documents or visiting a branch. That's what millennials and the younger generations expect. Here, there is a clear gap and a differentiating factor with the more recent and modern banks. A great KYC combined with a great account opening journey is a clear area that banks are now increasingly focusing on. Compliance and regulatory pressure comes from many angles. We already talked about increasing pressure on fraud, on privacy, and on money laundering. But it is also to be expected in that new areas of regulatory burden will come in the future. Another point which is critical is that dealing with legacy costs is also going to be a huge problem with banks. Inflexible, expensive legacy infrastructure prevents rapid change. For dozens of years, banks have tried to modernize their IT systems to get out of their mainframe, but it's super hard. It is hard because the business logic hidden in this legacy system is hard to uncover and migrate. New technology and innovation will, of course, come from opportunities in machine learning, in artificial intelligence, in smart analytics. But firms will need guidance on how to start this. It's not that easy to start with artificial intelligence and machine learning, although it becomes mainstream now. What we believe is that instead of starting by hiring armies of data scientists, they need first to start playing with their data and start using tools and services that will allow them to experiment with artificial intelligence and machine learning with little, if not zero, knowledge of complex algorithms. So this will require, however, to focus on making sure that their data is available and that they know how to deal with the data. On the next slide, what we see, we already discussed about faster onboarding, intelligent care, etc., etc. Another area that I would like to focus on a little bit is it's another area of customer delight, but which is also a way to manage cost and focus call centers on value-added services in AI in the contact center. So customer delight is not just about the mobile app or the web app. It's also about proposing new ways to interact with your customers, such as with virtual agents. And virtual agents are going to be ubiquitous in the banking relationships with customers. Conversational bots, either in writing or on the phone, will be able to filter a lot of calls from customers to let agents focus on the most complex calls. This will be not only a cost exercise, but also user experience improvement. On risk management, things are also changing rapidly. New architectures using streaming technologies and being more real time. You will see fewer and fewer batch-based architectures and more real-time architectures. This will be combined with AI and ML models that have been previously trained, but that can be used in real time for commercial activity and for risk activities. With artificial intelligence and machine learning, loan default or credit risk predictions will be more accurate, but this will take time as the models will have to be trained appropriately and on the right data sets. And getting the right data sets to train the models will continue to be the most challenging parts. And I'd like to focus on the last point, which is open and open banking, open source, open platform. At Google, what we like to say is that open is going to be a keyword. The regulator has also already forced banks to open up their infrastructure through PSD2. And we believe that open source and open ecosystems and marketplaces and platforms will play an increasing role. So if we go to the next slide and try to summarize what we've said, a few things to help banks and financial institutions reflect on their innovation. First, innovation will allow them to introduce new products and new products at a faster pace. Data and artificial intelligence will allow them to better manage risk and make more accurate prediction. Data will also help them, together with AI and machine learning, to improve operational efficiency. Real-time and new streaming architectures combined with a higher degree of modularity in your IT architecture to introduce more products and more frequently. Architectures that are not flexible, that will have to be more flexible, so that when you want to create a new product, you don't have to reinvent the wheel, and then you can go faster. And all this being made easier by using the cloud. We at Google Cloud like to say this because cloud is not just an innovation accelerator, but it also creates more modularity, and it allows you to pay exactly what you need and stop paying when you want to decommission an application or stop an experiment. So in the following slides, you will get a number of examples. We will talk about a number of examples of how Google Google Cloud has helped their customers achieve some of these challenges that I mentioned here. They vary from customer experience, new application, the use of AI and ML in risk management, modernizing IT legacy system, introducing platforms and API ecosystems, etc., etc. So if we want to conclude and go to the last slide of the presentation, which is also the conclusion of what I wanted to say here, there are a few things that I want to say. First, the cloud will be pivotal in this new strategy. You will use the cloud because you will need more flexibility, because you want to access to more innovations, because what you want to do is to go away from traditional architectures and move for more modular and less traditional architectures. But you will have to make sure that your new architectures are reliable and secure, which the cloud will help you achieve. because the regulator will be more and more demanding on privacy, on security, and on compliance. You will use more and more AI and machine learning, not only to better predict, but to also enhance customer delight and customer experience. And you will create a modular and flexible architecture with, for example, microservices to improve your time to market, but also to improve your time to initiate new innovative projects and to only pay for what you actually need. So good luck with your endeavors and goodbye.